Hey guys, Mike here. So, oh boy, what a roller coaster day in the market. I don't know if you saw it or not, but we were all over the place. Huge swings today. And so, no surprise, again, we just ended quarterly OPEX, the end of September. And, it was Cam Carson told us that this is an interesting OPEX to say the least. Now we'll be heading into October. What the market do, exactly what we talked about. We ended up at least 10% up on the S&P going through September, so that's what we needed, to follow that chart saying, was it going to be bullish? And October is always iffy, and we'll get into more of that this weekend. I'll do some videos for you, but, fourth quarter, usually November, December, because of the flows, seasonality, things of that nature, is bullish, but October is going to be very interesting, let me tell you. But the good thing was, if you're a bull, a lot of supports were held. I'll show you that right there, what I'm talking about, certain levels and everything. But it looks like smart money, big money, whatever you want to call them, is coming into another short here. And you can see, supposedly, they're telling us, you know what, people aren't taking November rate hike serious, right? I think it's like an 80% chance. The market's saying there's not going to be another rate hike. So they decided you got this big new short positions followed by a record volume day in the Fed funds. So they're starting to load up into this. I guess they're trying to say, yeah, there may be a rate hike, so why not take the bet against it, right? So let me know what you think in the comments. Honestly, at this point in time, I don't know what the Fed is going to do because the data is coming in all mixed right now. It seems like we're hot in some areas, seems like we're weak in other areas. So, predicting what the Fed's going to do, usually that tracker is correct. I don't think they've gone against it yet, and they bend over backwards not to shock the market, so I'll be surprised. Now, whether they keep it the same or raise one more time, I've showed you companies before, and I'm going to continue to show you companies when I get this information. But you can see what the quarterly interest expense is doing to companies. So this is Petco and Hanes brand, right? I showed you others, and I'll show you these. Just look at the increase from the first quarter of 2022 of these two companies until now, right? Most of them are doubling. And so that is just not good, especially, if you're in a business with smaller margins, it's definitely not good. And if you're in a business where you just don't have the ability to pass on extra expenses to your customers by raising the prices, it's even more detrimental. So, there's many companies out there like this. Now, again, a picture's worth 1,000 words. I always like to show you stuff like this because if you ever wonder why the U.S. stock market can go up in the worst of times or just when times where you just don't understand what's happening, it's because that's where our money is. Okay, you look at the U.S. stock market. We're talking about, what is it, 109 trillion at the top of this page right here. And you can see how much of that the U.S. actually makes up. And so we're talking about people around the world putting their money here. So yes, this is why the stock market will always go up, even when you don't think it will. It'll continue to go up. It's why it goes up the majority of the time. Now, speaking of a picture or a video worth 1,000 words, there's this company that puts these little clips out. I sped this one up to 14 seconds for you. But again, I tell you, what does the market do? It finds ways to push up the market, right? Doing all these liquidity grabs, but up is usually the way. It'll be a different, time. Next time we crash or burn, whether it's next year, the year after that, or 10 years after that, it'll find another way to push it up. What was it in 2020? It was SPACs. All these IPOs that came out that literally had no revenue, no sales, just push them to the moon, right? And then, of course, what we do in 2022, Octoberish, started buying the big Magnificent Seven. So check this video out right here if you've never seen this before. And pay close attention to March 2023 right here. You see, this is the equal weighted ETF facing the Magnificent Seven. Look what happened to the equal weighted ETF in March of this year versus the Magnificent Seven. That is a huge difference, right? And this shows you exactly why this market continues not only to go up, but it continues to stay up. And guys, before we continue, please hit that like button. It helps people find the video. I really appreciate that. And if you like this kind of content, think about hitting that subscribe button down at the bottom. And of course, as long as those stocks continue to hold up, maybe you want to add 3 more in there, then the market's going to hold up. Like those had to be taken out back and taken to the woodshed, which you've seen recently, right? That's why the market comes down. Now, what happened today? Why do you see the huge, move up right out of the gate? And it's simple. Always pay attention to these 3 things. You can throw the VIX in if you want to, but when you see the 10-year yield, the dollar, and U.S. oil all go red, the market's going to shoot up with a quickness, and that's what happened. The dollar actually got a bounce today and kind of started fighting back when it hit this trend line. This is a short-term trend line I put in here weeks ago for you guys. It only goes back to, it looks like July right there. And so it got a bounce on that, and you can see the cues. Look at this. We jettisoned up 1.3%. We said we're going to the moon. So cue the roller coaster. And it's always one of my favorites. Thought it'd be appropriate for this segment here because that's exactly what it felt like. Am I wrong? Please put in the comments. Now, the S&P, very important. It was fighting for this trend line, fighting for its life. You can see right here on the hourly, MACD still looks like crap right here. RSI looks terrible. Trying to pick up some momentum. Not really, though. It's just not really happening right now. But again, every time we hit this trend line today, which I think was 3 times, it bounced. Okay, remember, we got all these gaps above. Huge volume gap right there. If you can get pushed up, the 200 days, pretty much right below where it is now. And I'd love to see a push down to that 200 moving average. Again, if we go to the daily, you can see still oversold. Like I said, that don't mean it ain't gonna get a bounce and come back down. I showed you this yesterday, okay? Looks like the MACD is trying to curl, but again, a lot of momentum has to pick up. And it can happen fast because, again, people are still short in this market. So we know what happens during this time right here, right? And again, there's your 200s right down there. That'd be a perfect bounce on a support line and everything. We'll see if that happens or not. But when you go into the IWM, still the same mess, right? MACD looks terrible. RSI looks terrible. We got that bounce like we thought we would. Sold back off today. Again, this thing right here, it'll move and it'll start trading sideways, but you got to get above the 0 and the 50 line right there on your MACD and RSI, and that's when you'll get that big push. And if it gets in that volume gap, it's going to move because that's the way this ETF moves. Now, you look at Tesla. What stopped it today? It was moving up pretty strong, gapped up, hit that 50 moving average. That right now is resistance. On the hourly, you can see it's creeping above the 0 line on the MACD, which is really good. RSI is above the 50 right there. So, it has some momentum, okay? It didn't quite hit that trend line at the bottom, but it didn't do that last time either, right? But when you look at it, decent support right here is where it got the bounce. If we move up, what is that, like 255 right there, 256, somewhere in there, will be the next resistance you want to look at. If we can get through that, we'll go through the next volume gap pretty fast, around 267. Don't quote me on that. I'm kind of eyeballing this, but you'll get that gap fill. And again, we just got to see if some momentum continues because October is going to be tricky, okay? Now, more information come out. I showed you the stuff yesterday, and then this one right here is the top selling models in Europe from January to August 2022 versus 2023. And what do you notice? Tesla's Model Y, just dominating, right? It's like the most popular model you compare to all these others, and look at the growth of it. So again, they're number one for sure. And I always thought to myself, if they start to struggle, what do you think is going to happen to other EV makers who have basically nowhere near the amount of infrastructure or cash they have on hand, right? So just think about that one. Now, Apple, again, still didn't fill this gap. It was a little red as the day ended or whatever. It went green, then went back to red, I believe. But you can see, on the daily right here, momentum just isn't there. The buyers aren't really stepping in a mass amount. They're just kind of keeping this thing floating, keeping it from breaking down through that gap, hitting the 200. I would love to hit the 200 again on that one. AMD started off hot, again, got rejected. We're at that trend line, descending trend line on the wedge it's been in forever. And you can see bearish MACD cross on the hourly. It doesn't mean much. It is the hourly. Let's keep that in mind, a shorter term time frame. And again, we'll have to see if this changes come Monday, okay? Now, you might have noticed Chinese stocks were all green. And again, as usual, round 8 here of, it's not even stimulus. But as I told the members in the morning brief, you can see right here, Beijing proposed easing rules on cross-border data flow. The Cyberspace Administration of China proposal would mean that data transfer relating to the international trade, global manufacturing, and marketing activities that don't contain personal data no longer need to go through a security review. So, blah, blah, blah. And the stocks loved it. So we'll see what that does for it, right? Now, I told you guys, what I tell you, I said, if I was the CEO of one of these top execs of those building companies over there, those construction companies, I'd be getting on a private plane out of China before they arrest me. And you can see right here, the Evergrande chairman and founder was put under police control. I don't think he actually got arrested. I think he's under house arrest or something. But we all know that dude's fixing to disappear pretty soon and go get re-educated. Re-education means you do not embarrass the Communist Party, especially the president. So anyway, I told that dude to get out of there. He didn't listen, all right? Now, when it comes to PayPal and Disney, some of you guys were asking about, stage 4, stage 1, stage 2. And the one thing you want to look at is not just the 30-week moving average or 40-week, whichever one you choose. you want to look at the angle of it, right? So right now it's still pointing down, okay? So that's why, obviously momentum, a moving average will tell you this. Still pointing down. You want to start curving and start going back up, right? So PayPal can rally up, but if the moving average is still pointing down, that is a bearish thing. Again, this is a weekly, more longer term chart. And of course, I'll talk about a lot more stuff in tomorrow's video. A lot of you guys have been submitting questions and comments and all kind of stuff, so it's really good. So I'll put that out there. And then, of course, we'll have Sunday's video. Set us up for the week and everything. Again, next week will be very interesting. That's the best way I can describe it. I can't wait to see, how the market's actually move and everything starting in a new quarter, especially October, because October is iffy for a lot of stocks. It's actually bad for a lot of stocks. Really, November, December, the bullish ones. But October, it can be hit or miss. So we'll see being down the 10, 9, 9.5, 10% we're down on the SPY. If that matters, we'll get to see if, is oil finally going to take a break, the dollar, the yields, all that good stuff, and how is the market going to digest all the hundreds of billions of dollars of bonds and stuff that the traders are going to be issuing this quarter, right? Because it's front run a lot of it. Now we get to see how it digests it when it really happens and stuff. So just keep that in mind. So please hit that like and subscribe button. For those who want to join the membership, again, less than McDonald's combo. Gonna get what? You're gonna get your morning news briefs with all your most important news, your liquidity, your breadth in the market, the options daily ranges and weekly ranges on the Monday news brief. If you like Max Payne, I put that in there too. And this goes into the Patreon. If you don't do a Discord, I put the members videos and that in there for you on the Patreon. And of course, here's your members videos, which again come out twice a week, and it's stuff you can use for the rest of your life for the most part. Just keep that in mind. You'll get your liquidity stuff in there as well, the charts, which of course is what drive markets as well, and your seasonal strength, and we do company earnings, do all kinds of stuff. Plus you have a Discord to talk to members and stuff. And again, less than a McDonald's combo at $7.99. And so I'll see you guys for Saturday's videos to answer your questions, comments, and all that good stuff. So have a great weekend, guys.